So good morning, everybody, or I should say good afternoon. And I would now like to welcome you to the last session of our conference, which is our Transaction Banking 2024 Vision Panel with the title A Few from the Top, where we're going to have a discussion with leaders in our industry on global trends, the future of transaction banking and the FI industry in our new world, challenges, opportunities, innovation, and also talent management and other topics. Just to introduce myself, for those of you who don't know me, my name is Karin Walchshöfer. I head up the Global FIG EMEA team at BMO Capital Markets. I'm based in London. I'm also the co-chair of the BAFT Europe Council, and I will be moderating this session today. Just a couple of housekeeping notes. We have 45 minutes allocated for this panel. So please, I would like to encourage you to ask questions on the online Slido tool. We try to get to your question towards the end of the panel. There will also be a couple of audience poll questions coming up during the panel. And as before, if there's any press here in the room asking questions, then please identify yourself. So thank you for that. So first of all, I would like to introduce our three panelists. On the far side, we have Paolo Muzzarelli from UBS. Paolo joined UBS in October 2023 as Head of Transaction Banking Products, and in his role, he's also a member of the Institutional and Multinational Banking Management Committee within the Swiss Bank division of UBS. Paolo actually joined from Credit Suisse, which is now part of the UBS group, and his career at Credit Suisse started in 2006 as a strategy analyst in the group's corporate development organization. Since 2011, he has looked after financial institutions, first covering banks as relationship manager, until 2015, when he took over the role of head of transaction banking products. Paolo is also a member of the board of directors of CLS Bank. Welcome, Paolo, and thank you for joining us. Next, I would like to introduce Francesca Nenci from UniCredit. Francesca is head of group trade and correspondent banking, and she joined UniCredit in 2004 in the Institutional and International Affairs Department, becoming its head of political studies before moving to the coordination of the group's international network. She then joined the trade finance department, where she held various roles before becoming global head of trade finance and working capital solutions. Francesca has been instrumental in the successful development of a number of important trade finance initiatives, including the digital transformation of trade finance, paper-intensive business, and she's also a member of the working group on sustainable trade finance at the ICC, International Chamber of Commerce. So welcome, Francesca.
Thank you.
And our third panelist right next to me is Stuart Foster from NatWest. Stuart is Managing Director of Financial Institutions, and in his current role, he brings together FI customers across three customer sectors under one single focused business within NatWest. And these customer sectors are non-bank FI, funds and banks and SSAs, funds and banks and SSAs. So Stuart's role here is to drive the customer strategy and deliver the whole bank to NatWest institutional customers. And he's also a member of the commercial and institutional exco and risk committees. Stuart's previous role was Managing Director for Institutional Banking and Depository Services at RBS International, which also included NatWest Trustee and Depository Services. And he was also a member of the exec committee of RBS International. So big welcome to Stuart and all three panelists. So before we kick off the panel, I just would like to put a little bit of context to this year's discussion. I've been privileged to moderate previous transaction banking vision panels during other BAFT conferences in the last few years. So I thought it would be interesting to just briefly mention maybe some of the takeaways of these previous panels. So there was a lot of talk previously that traditional products were increasingly also offered by non-banks. Banks needed to focus on those areas where they're best placed to compete effectively, and also the need to find sustainability solutions for our clients. And we talked a lot about talent management as well. So some priorities have changed now, some are still the same, and the first topic we would like to cover now today is exactly that, our current and future priorities, especially in the context of all the various challenges we face. And Francesca, if I could maybe start with you first of all. Looking back, how has transaction banking changed in the last 5 years, and are there new business models emerging as a result?
Thank you, Karin, for the interesting question. Allow me to start from a little bit before these latest 5 years. And I start with the question, if you know where you can find the first issued letter of credit. You can find this letter of credit literally on a piece of stones at the University Museum of Philadelphia. It dates back at around 3000 before Christ, and it is during the Babylon age that we had this real first example of something that is similar to a letter of credit. It is simply a commitment to repay a certain amount and interest on a specific date. So since then, the business changed a little bit. We are not using any more piece of stones. That is already a good news, even if probably now it would be more sustainable, considering that every year we are using something like 4 billion of pages of paper to deal with trade finance business across the world. We are still requesting to receive from the bank perspective, something like 30, 35 original documents. Otherwise, we cannot book the trade finance transaction. So let's say that for sure, and on this I'm a little bit provocative, in the last 5 years, we had to deal with a completely different environment. One of the reasons for which this business, in my view, didn't really change is because, as Paolo was saying before, this is really a business that is anchored to the real economy. So this is purely a need of the companies and of the financial institution to support the corporates. So it was not really facing the need to change. In the last 5, but even 10 years, probably the environment around us changed dramatically. A lot of topics have been raised during these 2 days, the geopolitical tension, the inflationary pressure, the need for the banks even to have more grip on cost and operational risk and cost, as well as the newcomers in this area. So during these latest 5 years, more than changing the business, I think that both corporates and banks find new way to deal with this business in a way that will grant the sustainability of these businesses in the medium term. So for sure we invested a lot on innovation, on new technology. If you look at the operational risk and cost, we have the rise of a lot of artificial intelligence tools that were implemented in the operational process of trade finance. We have the digitalization of the way in which we are communicating with our clients through front-end platform, but even with several third-party platforms that were launched on the market. I think we have also the big opportunities of the secondary market that were rising in the latest years. And if you look at the other part of your question, the partnership, I think that this was probably one of the things that changed more. The collaboration across banks to preserve the sustainability of this business, and also the collaboration that we were able to implement with ICT vendors, fintech, to work together to face this kind of challenge together, and also with the customer. In the panel before, they were mentioning our close alignment with the corporates for the credit conversion factor. But even when we are developing new front-end system, we are speaking with our clients. So we are all together in facing the challenges and granting the sustainability of the business. Did we really change the business? No. We are changing the way in which we are trying to do this business, because to change this business, there is a key piece that is still missing, and is the regulation, and is the regulator. Meaning that until we don't have a more clear regulatory environment, until we really don't, let's say, raise the awareness of this business and the knowledge on this business, I think that we can do a lot, but all the solutions that we will implement will be standalone solutions that in reality are simply enabler that would have really a bigger added value if also the regulation will allow us to change this business.
No, thank you, Francesca. That's very interesting. And just when we keep looking back, all of you manage large teams, and working from home, I'm talking more about the team management, working from home or in a hybrid environment has become a big feature in the last few years. And just Francesca, maybe staying with you on this topic, what are the lessons learned while working from home, and especially how to manage teams in a hybrid environment?
Let's say that we learned a lot. I think all of us learned a lot from the COVID-19. Today, we are working in organizations that shift on a more human-centric employee organization. We have employees that are requesting us as a permanent mix of remote and on-site working. In UniCredit, we invested a lot on a purpose-driven culture that is based on trust and clear targets for our employee. If you ask me if this is enough, no, this is still not enough. As you understand, I'm always asking something more because, and on this, sorry, I need a paper and to remember some data, but I took some data that can help me in explain me better what I want to say. I took a recent polls among 31 markets, and 40% of workers were considering leaving their job in 2022. 70% of workers that left did it on a voluntary basis. And if we look to the Gen Z and the millennials, 35% of workers plan to leave their job in the next 2 years. So we learned a lot and we did a lot. There is something that we should not forget, and is the sense of belonging. So also in the hybrid environment, I think we should play with 3 different factors. One is the human factor, the other one is the digital factor, and the other one is the physical factor. So we need to be able to implement a new way of collaborating among the employees. We need to have digital platforms supporting this new way of collaborating, and we need, in my view, to have always a mix between remote and physical presence. Let's say, to sum up, I think this is still a journey. Every day we are learning something new, and I also think that we need to have flexible organization able to adapt to this change and to a generation that is more demanding than in the past.
Thank you, Francesca. Maybe now moving from looking back to looking forward, before we come to the next panelist, could we have our first audience poll question up, please? Would like to ask the audience. Well, our question is, what are the biggest opportunities, or actually it could be challenges as well, facing the transaction banking industry going forward? Evolving client expectations, innovation, sustainability, geopolitical influences, or something completely different? If you could please vote now. Can we see the voting? Anyway, while we're waiting, there should be obviously some figures coming up, but while we're waiting, Paolo, if I come to you next, where exactly the same questions, where do you see the opportunities and challenges in transaction banking going forward, and how do you think the business will change in the next 5 years, or perhaps even the next decade, if you can look as far as ahead?
Thanks, Karin. The good news is that we can make up for the answer, right? Depending on what you would like to do. No, so thanks a lot again to you, Karin, also to BAFT for having UBS and myself on the panel. And good afternoon to everybody. To my understanding, it's the last panel, right? And yes. So I would really enjoy to start on a bullish and positive note, especially for the future leaders. Where are they? Hands up. Are they still in the room? Fantastic.
Good.
So, and the positive news is that I really, truly believe that we are working in a growth industry. And why I'm saying that, of course, we are all aware when we heard it yesterday with the Geopolitics panel, we have heard it today with Paul. Of course, it will be a bumpy road and there will be trends that play against us. But there are really fundamentals that play in our favor. Take trade. There is an interesting study of Stanchart that has been published, The Future of Trade 2030. And they are looking at some of the trends over the next decade. And basically, they're bullish about growth because they see new trade corridors, right? And that maybe are less relevant today, but will be more in the future. Intra-region and across regions. And they forecast a 70% growth of trade over the next decade. Even if it's half of it, 30, 35, it's still great. And maybe on the comments of Paul this morning, of course, there will be elements playing against us. But if you look at some of these new corridors, maybe working from home is likely as relevant than it was in the UK. There are some demographics at work, and most probably these people are not distracted by a beer in the evening when they get home. So I'm really bullish on the fundamentals of trade. Same for cash. You can look at different analytics, including Mercer, Oliver Wyman. They say 25% of global GDP today is in cross-border payments. And if you think about it, we expect global GDP to grow as well as we expect this share of cross-border payments to grow. Same could be said for custody, who is benefiting from asset appreciation, who is benefiting from basically financial debt. That's on the volumes though, if we are honest. Now the challenge will be how will that translate into revenues? And I see two challenges there, Karin. The one is the pricing, and we have heard a lot. They're raised to zero this morning. On the one side there will be digitization, but also new business model that will challenge our current business model, and that will be a fascinating story. And at some point, even trade will need to fall in love with digitization and start, cutting trees all over the place. So that's the one. And the other one is also new incumbents. And you have seen in the payment service provider space what these fintechs have done to payments overall. So I completely agree with innovation, which is basically the only element we have in our hands, I think, to shape that landscape and to really look at, those basic growth drivers can be translated by the people sitting here in the banks where we are sitting into growth going forward.
No, thank you, Paolo. And we have the results now. We're talking about innovation a bit. The second one is geopolitical influences, and that is really the challenges. Our next discussion, really the topic of current geopolitical changes and challenges. If I may switch to you, Stuart, now there's a lot happening in the world at the moment. So my next question is, what is the geopolitical impact on the FI industry, on transaction banking, and how important is global resilience in this respect? Thank you.
Thank you, Karin. And I seem to have a microphone, so
yeah, I don't know why, but
I feel I've broken the set. I think clearly, unfortunately, we live in an awful and unprecedented time in human history, and geopolitics is clearly right at the top of the agenda of most of our boards, most of the exec committees, and the resultant macroeconomic impacts will play heavily on all of our business models. And it goes without saying, the importance of global resilience to our respective institutions has never been greater. Clearly was always thus, particularly post-GFC, but given the world events and the uncertain future we face into, it's so important to demonstrate really clearly that all of our institutions are very clearly resilient as we enter this unprecedented time. I think if I try and break that down into four areas, firstly, the fairly obvious one of financial stability. So the strength of each institution and demonstrating capital, leverage, liquidity, profitability, business model, flexibility within that business model has to be paramount. We saw the events of last year where events very quickly damage institutions, and the story runs away from the ability of any particular institution to respond. So the proactive messaging of our collective industry in demonstrating that clear resilience is fundamental to the trust in the system. It's no surprise to me for those that were at the IMF in Morocco at the end of last year, the number one agenda item wasn't ESG, wasn't innovation, it was ALM, asset and liability management of every single institution, and it plays right into this financial stability point. Secondly, financial crime and security more broadly, cybersecurity, fraud. Clearly, as ever, it's incumbent on all of us to have robust processes around AML, sanctions more broadly as the world changes and we need to react to the geopolitics that we're facing into. We have to be and pour significant resource into those areas to ensure our processes and governance are at the leading edge of the regulatory requirements, and our core systems are invested in, whether that's cyber security or fraud, because our customers and the broader system are going to worry increasingly about that trust element. Thirdly, I guess just the basics of trade and capital flows. Sadly, as we're already seeing at the moment, supply chains and capital flows are going to be disrupted, are being disrupted, and unfortunately look likely to continue to be disrupted. So how we react as an industry and together to help our customers work through those challenges is going to be of huge importance to all of us to continue and show resilience in terms of the customer sectors we serve. And then finally, technology more broadly, the need to innovate as per Paolo's response and to that question, to keep pace with some of the geopolitical shifts that are happening as different regions invest heavily to get that technology prominence is going to be key. How we react as an industry collectively and invest heavily beyond the basic infrastructure to ensure we're at the cutting edge of the future is going to be absolutely fundamental to that resilience. Otherwise, we'll be bystanders in the global trends that we face into.
Oh, absolutely, fully agree with that. And I think that leads nicely into the next discussion, really the global trends, the topic of global trends. And my question here is, which are the most important global trends for your business, especially in the context of digitalization, modernization, and how is innovation impacting your business? I mean, Francesca, I ask you to comment first. I know you mentioned already innovation a little bit in your first question, but you have been obviously involved a lot yourself in digital transformation. I mean, what are the challenges and opportunities, and how is innovation impacting business? And maybe after Francesca, I'll move to Paolo with the same question. Thank you, Francesca.
As I was saying before, Karin, in my view, let's say we use technology to face all the challenges that, above all in trade, we have around us. No? So, for example, in UniCredit, we invested a lot in artificial intelligence tool to help to support the trade finance operations department, because trade is a very human-heavy business, and working in a bank, you need also to preserve the profitability of the business and to justify why you need hundreds of people handling thousands of paper. So on this, we are using the technology to understand how this can become more sustainable in the future, even because you don't find anymore on the market people that wants to do this kind of job, and even has the right knowledge and technical knowledge to do that. So in order to not become hostage of this big trade finance operations team, we need to focus our people on activities that are more added value for the client than simply the booking of a transaction. So we invested a lot on this, on the discrepancy check, on helping the trade finance operations department. So since we were not able and we cannot alone digitalize the business, we try to digitalize our internal process, because unfortunately still we need to deal with all the papers. Plus, in addition, as I was saying before, we invested in digitalizing as much as possible the way in which we are communicating with our client, also in some cases showing them that is better for them, not only for us. I think that looking forward, I hope really that one day we will be able also to use the massive data that we have, not only in payments, but also on trade finance transaction, because these, if we are able and if we are allowed to use them for sanctions reason, or even to exploit new business opportunity, I think can bring a lot of added value. And I really look forward to, let's say, a period where the digital document will be recognized, their validity will be recognized also for trade finance, because I think this can be really in the future a game changer. Otherwise, other solution that will be pushed on the market directly by the FI, one for all the blockchain consortia, it's clear that without the right regulation and without the right engagement of the different stakeholders, unfortunately, will not be successful, simply because the client will not perceive the real added value if you are already working on the technology. As I said before, modernization or innovation for me is an enabler of a solution that unfortunately cannot be only on the technological side when we are speaking about transaction banking business.
Thank you. Paolo, anything to add on the topic global trends?
Yeah, I think, look, Francesca said a lot. We have discussed a lot those days over the panels. Maybe just something you just said, and also the question we have on the screen, the growth of revenues coming forward. data just as a buzzword, I think we also will need to rethink some of our service models and what we are really delivering to the clients. I know it's a tricky one, a payment stays a payment, but we had the discussion also this morning, what are the ancillary services around the payment, and which of those could I cover theoretically also in an interbank space. And I think also with data we could do much more as an industry, so that's just the one angle I would like to add. Maybe just very, very briefly though, also one concern is regulation, and not only in trade. It's also on the payments cash side. Let's be honest, we live on intraday limits. You have heard Greg this morning. I was at Credit Suisse during that phase. I suggest you to give a read to the Swiss National Bank 2023 Stability Report and look at some of the observations they made. It's very short frames. One is on liquidity. And I really expect liquidity regulations to look very different in a few years than they look now, because they've proven not effective.
Thank you. So next topic, moving on, I would like to cover is partnerships, and that's really a topic close to my heart, and really connecting that back to the theme of this conference, which is reinforcing partnerships in a diverging world. And Stuart, if I can come to you first on that, how important are partnerships with other banks for financial institutions?
Enormously. So I think partnerships drive the whole financial ecosystem. Certainly at NatWest, some of the huge trends that we're trying to face into to serve customers well and as best we possibly can, and serve them in regions we're not present in, can't happen without strong partnerships with all the institutions in this room. I look more broadly at some of these huge elements we need to tackle and face into, whether that's regulatory change, the future of payments, innovation more broadly, climate change, ESG. These are enormous investment asks that require the intellectual and financial resources of our collective effort, and partnerships drive that behaviour to get the best outcome for customers holistically. And there's many, many examples of that, and you'll be aware across all this spectrum. But without genuine collaboration with clients, sister banks, partners more broadly, we will not end up doing what we're here to do, which is to serve clients and the economy more broadly.
No, thank you. And that's fully agree with that. And Paolo, maybe the same question to you, but more for a transaction banking focus. How important are partnerships in the transaction banking space, also in the context of competitors? Because often we are partners, but we're also competitors. So we talked a little bit earlier already. Who are the competitors now? And what's the competitive landscape actually looking like?
I think I'd be short of that one. And actually, if you make a few step backs, I mean, we are partners and competitors by design in transaction banking. If you look at the business per se, I mean, you have local or regional champions that are supporting other financial institutions either to enter the market or to support their activities in the market. And that's why by definition, and we all know, we are in this constant, kind of friction between being competitors and being partners. But of course, we are looking a lot at the partner side of the medal. And I think the interesting part, also back to my comments on data, on the revenues, what could we do else in the future beyond the traditional transaction banking? And there have been initiatives. I recall at Credit Suisse, for example, supporting as a large wealth managers, other wealth managers with suitability data so that you know how risky a product is, and we do not need to produce that data across all of the banks. UBS is having an offering as well on the advisory side in terms to support other banks with their advisory process. And I think that will be an interesting angle where we will still be competitors, but we will be partners and basically sharing some of the fixed costs, sharing some of the capability in an efficient way.
Oh, thank you. Now moving the angle slightly now from partnerships, relationships to customer expectations. My question here is, what are the customer expectations in our new world? And what do banks need to do to accommodate these expectations? And Stuart, if I can ask you that question, because obviously that's a big part of your role, is driving the customer strategy.
Yeah, and customer expectations, quite rightly, will continue to rise. And as an industry, we need to meet those expectations as best we can. And I often simplify the challenge for the corporate and institutional space by equating it to our own experiences as consumers of banking services, which is now quite good. I think in the main, you have an app, you move money around, you save money, you borrow money, you hedge, you get foreign exchange really very easily, and that isn't quite as true in the corporate and institutional space to the corporates and institutions we look after. So how do we make the services we provide instant, constant, transparent, price efficient, and continually challenge ourselves to reach that same experience that we as individuals have in our retail areas that clearly, I think, I hate to say it, are ahead of the corporate and institutional parts from a customer experience point of view. I think Paolo also quite rightly focuses on the use of data, and I couldn't agree more. Clearly a major theme in our industry and each of our institutions. How do we use data well to protect our clients in terms of fraud detection and so forth, but create that better customer experience? Personalisation is no doubt a theme in many of our institutions. How do we again create that predictive behaviour and advice based on data and behaviour that we all have? I think certainly in NatWest we're striving to get that lineage much clearer and much more proactive in all our client segments. Then probably coming back to the comments I made in the prior question, trust is an enormous quality at the moment, and maintaining the trust and stability of our collective industry and institutions to consumers, corporates and institutions, and indeed sovereigns alike, is of huge importance. And again, coming back to my response to the earlier question, it's incumbent on us all to maintain that sort of face to market of stability and trust in our industry. And then finally, again, coming back to the prior questions, partnerships. How do we think about the client? Putting the client at the centre of everything we do means partnerships. It means delivering internally the whole of the bank to a particular client. It could be a human resource conversation, an FD to FD conversation. It's not about products and services. It's about the broader partnership that we can have with institutions and counterparts alike.
Well, thank you. So a question slightly different, and I'll stay with you, and it's a question we normally ask in these panels, is we're wondering how people from outside transaction banking actually view the GTB business. And Stuart, I'll stay with you because much of your career you were outside transaction banking. So how is transaction banking regarded from the outside and its importance to the bank as a whole, and what more can we do to position ourselves as a critical leading line of business?
I'm not sure I like being an outsider, but I think three fairly obvious responses to that. I think the empirical data suggests that transaction banking is set for a number of years of growth in income, or the wallet potential for our collective industry. That makes it a very attractive area for our respective institutions in a growth-constrained world and a capital-constrained world going forward. So there's a very obvious reason for our collective industry to focus on this sector, which I think is very helpful. And you've seen it in a number of reports and strategies that have come out from various institutions in the last 6 months, actually, where transaction banking is at the heart of a broader commercial and institutional strategy. I think, secondly, transaction banking is at the heart of a number of mega trends and themes that we need to consider proactively. Rising interests, the search for deposits, deposit beta, all rely on strong transaction banking platforms. How we interface with big tech, another interesting angle that we're all no doubt grappling with, the future of payments and the fintech industry more broadly. So transaction banking is at the heart of a number of shifts that matter much more broadly to our wider institutions. And I guess the third reason, and probably the one that's closest to my heart, I truly believe transaction banking lies at the heart of customer primacy. I think the depth and the breadth of relationships you have with whether it's corporates or SMEs or institutions or sovereigns, often at the bedrock of that is a transaction banking relationship, and certainly at NatWest that is fundamental to our strategy. It is from there that we wish to have conversations and that broader partnership across the whole range of the bank's services and products and intellectual capital. It all stems from that day-to-day service and etc. that is based in transaction banking. So in short, as an outsider, I'm saying it's enormously important to the future.
Good. That's the answer we wanted to hear. So moving on, in the interest of time, I would like to just talk about talent management, because that's very important. Could we have an audience poll question? Could we have the next audience poll question, which is more of a fun question? Is transaction banking still an attractive industry for the new generation of future leaders? Yes, definitely. No, run away. It's if you could vote, please. But while we're waiting, I'm glad. It's, oh, no.
That is very clear.
Oh.
19. It's also
Wow.
increasing.
No, it's going. It's 17%. So that question, let's start. It's exactly that question. Is transaction banking still an attractive industry for the new generation of future leaders? Francesca, let's start with you first.
It should be, I think. Let's say, I will echo a little bit what Stuart already said. In my view, we should a little bit decrease the technical part of our communication. Sometimes this business is perceived from the younger as too technical, something that you need to do for 10, 15 years, otherwise you will not able to understand. So I think we should, at a certain point, if we want to attract talent, need a little bit to concentrate more on the challenges that we are commenting since 2 days. Put also the younger at the center of this transformational journey of this business. So instead of mentioning by heart all the empty 7 messages, probably we should invest a little bit their attention, because probably also coming from different experience, you can really make the difference. Because as Paolo was saying, sometimes it's also a topic of challenging what we have done for decades in the same way and try to understand if we can do it in a different way. If you put this kind of challenge at the heart of the younger generation, I think that for sure they will be attractive. After, we need to consider that they are not anymore a generation that is doing the same job for 10 years, and we need to accept it and to adapt to that. But I think that if we decrease a little bit the technical part that we are always communicating and invest a lot more also in the communication on the challenge, as Stuart is saying, I don't think that there are so many businesses in a bank that are at the center of a so deep transformation. So I think it's a big opportunity for anyone.
Thank you. Paolo, same question to you.
I absolutely agree with Francesca, although we will have to ask our younger talent as well. I don't get tired to tell younger people that, in my opinion, transaction banking is a hidden jewel within the banking space. But generally, it's not well known. Back to your point, Francesca or Stuart, communication will be key. But that starts with us, if we are brutally honest. I was thinking back, and I remember some of the posts that we're publishing in terms of, recruiting process. We're looking for a custody, how do we call it? Custody product sales manager, something like this. Now, who in I would say, a mathematics university or wherever would know about custody PSP, as an example? Why don't we tell them it's a sales force covering banks, as an example? And then when we fill in with the criteria, we don't talk about transaction banking, but we talk about, the segment that we are covering, the kind of attitudes we are looking for, et cetera, et cetera. I think that would help a lot as well in communication, and that starts with us.
Thank you. I think on the same theme, empowerment, diversity. Stuart, how can we empower more or drive diversity from your perspective?
Well, fundamentally, each of our institutions should reflect the communities we serve, and to truly ensure that we have a diverse workforce. There are a number of ways to tackle that. I think, firstly, you have to create targets and measurement and transparency. So at NatWest, we are very clear across the board in terms of our gender targets, our ethnicity targets, gender pay gap, ethnicity pay gap, and very transparent, and sometimes uncomfortably so, which is okay, on where we're going and why we're going in that direction. You have to create a clear framework and accountability that top leaders, senior leaders are held accountable to, publicly, internally and publicly. That's really important, otherwise you won't drive true change. And then the importance of employee-led networks and inclusion champions and constant dialogue is huge. You know, alongside those measurements, targets, the framework and accountability, the culture of the firm has to come from within, and it can only be done by the vibrancy and health of employee-led networks that should be driving the whole culture of the firm. And that's the way you create true change, which will take time, but it's the right transparency and impetus.
Thank you. And then as a final topic really from my side, I would like to ask actually all of you about your career and your personal experience. What has helped you in your career to get you to where you are now, and what advice would you want to give our audience here, especially the up-and-coming future leaders who are sitting back there? And I've talked already a little bit about that, but maybe Paolo, if you could.
I'll be very short.
Yeah, give it a shot.
I think you really need to love what you do, and then everything is going well.
Excellent. Stuart?
Apart from luck, I think having a mentor, sponsor, a leader who believes in you and is willing to take a risk is really important. So find that person or people, and then be willing to take that risk, take the lateral move, take the risk that you're uncomfortable with, and your career will progress from there.
Excellent. Francesca?
I agree with both of them. I can only add that probably what helped me in my growth path in UniCredit has been also the fact that I did very different things inside the organization. So you know what, I will close with something. When I joined transaction and banking now is 60 years ago, probably, so not so much time, the first question that I received from a technical colleagues was, did you ever see a letter of credit? And they said, no, probably I even don't know what is this. And he said, so why did you join? Now I'm here. So I think we should believe in ourselves and think that we can learn everything, even when something seems too technical.
Oh, great. I think I'm conscious of time on that. I think just looking at the question, we've got a couple of questions here, but I think we've covered innovation and we've also the education, the revenues. Paolo, you already commented on that, and I know we're in a red. So I think I conclude this panel now. So I would like to extend a big thank you to all three of you for participating and for your time and for providing your very valuable insights. I also would like to thank the audience for listening and your participation. Thank you.
Thank you.